Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York on Monday, the 9th day of February 2015, and this is the daily report for gold and silver. Interesting day developing in the market as we move into the first trading day of the week. We currently have gold trading up roughly $6 to $7 on the day, $12.4066, that's our cash price. We have had a low of $12.36 and change. We have had a high of $12.43 and change. We did send out a special trade alert earlier this morning recommending that our subscribers get long. Stops at $12.27. I will detail not only the rationale behind the call this morning, but also we will start to talk about our upside strategy should the market move in the direction we are anticipating. Traders, we're also seeing a nice move in silver today, up over 17 per ounce, 1702. That's our current screen print. It has had a low of 1667 and a high of 1711. Currently trading up about 32 to 34 cents on the day. As I said, just over 17. More on silver towards the end of the show. So traders, I do want to address today's trade recommendation. We did recommend entering the market from the long side, roughly in this area, 1240, 1241. It's right where it was, ticking around 1240 and change. And I wanted to go ahead and talk to you about what really motivated that call and what I'm looking for in terms of any kind of a upside strategy out of this particular call. First of all, when we look at this market, we really believed we had a clear path when we looked it up. Wave 1, a wave 2, wave 3, and then the market came down and held this support level and kind of met within the parameters of a pretty exact model. In other words, when you get the market retracing 61% on a corrective wave 2, you'll typically get a shallower correction. 38% is fairly typical on your wave 3. So when the market began to bounce and find this support in this area, I felt we had a pretty good buy in this area. That was obviously wrong. We bought in, we got stopped out. We got stopped out at 57. Market runs down and actually breaks below this 50% retracement level. Now, the key level for me is really based upon a couple of things, and it's based upon this top, because this top is where we conclude our wave 1. Of course, wave 1 then becomes our benchmark that we use to ascertain or to forecast, to model our other waves that are coming in. We're going to say this is going to be a percent retracement, a percent extension, and of course, wave 4 is typically derived from our information on wave 3. All of that being said, when this market broke and broke hard the other day, besides stopping us out, and of course I never like that happening, but I also believe that any trader worth his weight in salt realizes we're going to have profits and losses, and it's how we handle the losses and how we get back on the horse, so to speak, to me is really the defining characteristics of a trader. But as the market came back up here, we know that in terms of having this be any kind of a valid Elliott wave count, this wave count gets deflated or defeated if in fact it breaks into this area, because the only way to hold a bullish wave count should the market move well below this is that we're still in wave 3. We wouldn't be in wave 4 because wave 4 cannot go into the territory of wave 1. So the fact that it went below it to me signaled that possibility, and the fact that we're back above it, that to me is what's really strong, because if we look at this market, this is a fairly logical place to find support, right based upon this top right here. We carry that over, and lo and behold, that's pretty much where the market's trading. Now, our stop is sitting 1227. The reason for that is that matches up just a couple of cents below this low that was hit as the market came down last week. So in terms of a risk, we're not risking a tremendous amount because we're risking the difference between 27 and 40, but realize you're getting $20, $25 ranges in the market. If it goes in our direction, that's beautiful. We'll trail the stop up, but it doesn't give us a ton of room to the downside. So I'd like to see this market itself, gold, really start to develop a good base in this area and move up from there. We'll have to see. I can't say that I'm bearish, though, and that's the reason we went back long. And the reason is that everything that we're looking at, when we look at a higher high, a higher low, a higher high, the judgment is out. But, even if it went down to 98, you're still going to get another higher low if it pops back up. So we need to see a series of higher highs. We also need to see a series of higher lows, and that obviously tells us the market is trending higher. The fact that it falls within this area, to me, that's a pretty good, solid indication that we could find support here, and that's why we took a stab at it. Now, in terms of strategies, we do have a different kind of a top, because now we're still going to say that wave 1 and wave 5 are equal. However, if wave 5 starts well below where we thought, which is why we're now setting it at this area 37, now the upper levels that I would look at is around 1340. Interesting day in other markets. We had oil up again. We'll look at a chart in a second. This is the weekly dollar index, and there's no doubt, at least for right now, we are getting some real resistance up in this area of 96. Equities markets, as you see, they came off of their lows today. These are the lows down here on our daily chart. Closed about mid-range, but did close off about 100 points on the day. Oil continues to climb off of that low. You can see this is a daily chart now, 52.77. We were looking at some real long-term stuff. Even on our weekly now, you can see these last 2 weeks of up moves. And in terms of our monthly, which is really giving us the biggest of all pictures, you can really see how we talked about this critical area here. Market absolutely went below it, but we're staying within those confines, and on a monthly basis, this is the first month that we're seeing a rise in oil prices off this dramatic low. Now, as far as silver goes, did close nicely, now back down below 17. My sense right now is that we're trapped within this range, and the range that I'm looking at is really defined by these two areas. Low just above 16, call it 1620, and the high right at around 17. I really need to see a break above this before I get bullish, and I see a really strong band of resistance right here at 18. So I have sidelined on silver. We did enter gold, maintain long gold position, maintain stop, maintain being sidelined on silver, unless you're taking the silver call in lieu of taking a gold call. I know I do have some silver traders out there. You can email me for particular stops on that. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.